Hi everybody, Evan with Mainstay Property Group, making a quick video throwing a lot of shade at people who are involved, investing, and in any way associated with the turnkey method of investing in real estate. Before I go any further, I can go on a freaking full-on tirade about this, and I'm going to try my best to compose myself, but before I go any further, in the first 30 seconds of this video, I want everyone to try really hard, dig deep, and find any millionaire, anyone, who made their fortune on making $200 a month from a cash flowing piece of real estate. Oh, wait. And literally, I'll give someone $10,000. I'll write someone a $10,000 check tomorrow if you can name anyone who's done that. Anyone. And someone's going to be a smart ass and say, well, I got a friend, I might grant my father-in-law 50,000 rentals. That's not what I'm talking about. You don't build a fortune by buying everything, market value, leasing it out, making $100 a rental, and getting 50,000 of them. That's literally impossible. I mean, if you 50,000 rentals. Anyway, I'm going on a weird little rant here because I got an email today from a local provider and a guy I respect a lot. He's in the turnkey space, and I like the guy more than I like his model, to be honest with you. Cool group, cool bunch of dudes, but they're in the turnkey space. For those of you who don't know what the turnkey model is in real estate investing, you'll have folks that buy a property, fix the property up, put a tenant inside of it, and then sell that property that is turnkey, meaning an investor can walk right into it and not have to worry about rehab or getting the property leased out. They buy an investment. They buy an income stream. And in doing so, the people selling it know this, and they can compress a cap rate to the point where the value goes through the roof, and the investor is buying a piece of property that is oftentimes 100%, if not in excess of 100% of the overall value of the asset itself. So some folks like this. They like the idea of not having to worry about a rehab or a tenant placement or kicking someone out or anything goofy like that, but they're willing to pay another 10% of what the property is worth at its all-time peak to make it happen. So to further demonstrate this, I'm going to load this up over here, but what you're looking at on your screen right now is a property that literally, I'll back up here to show you this. This is an email sent at, let's see, this is at 3:56, 10 minutes ago. Today's the 25th of June, and now it's closed and funded. The property is referencing is 4172 Vandalia. Okay. So remember that address. 4172 Vandalia is a property that our group identified and sold to this gentleman, Mr. Mike Lee. Mike, if you're watching this, hey man, thanks for the business. As always, the repeat business. Mike's a very good friend of mine. And about 30 minutes or 40 minutes before Mr. Mike bought this property officially, I got an email from another turnkey provider here in Indianapolis. And again, nothing wrong with the guys at all. Love the guys, love the group. They do good work. You can click through these pictures, and it's good stuff. I mean, it's a nice quality product, but again, they know it's a nice product, and they know that they're getting a solid amount in rent for it, $900 a month. I think it's a 2-year lease, $85,000. For those of you that didn't see what Mike paid $50. And I know what everyone's thinking. Well, show me what it looks like. Show me what the thing looks like. Is it a dump? Every investor talks like that, by the way. So we'll load this up and let you guys look through pictures. But this is what $50,000 will get you. And hopefully this will demonstrate my level of, okay, at the end of the day, it's not about your cash flow. Your dividend means nothing as long as if you're not having your balance sheet equity baked in as well, to the point where you're building balance sheet wealth simultaneous to cash flow. Any idiot can buy any property and get it to cash flow. That is not hard. The difficult part of real estate investing is building balance sheet equity simultaneously to where you can be able to pull your money back out and redeploy again and again and again and truly build a portfolio. Any idiot can buy a property. Any idiot can get it to cash flow in Indianapolis, and I mean that. Any person with a pulse and a couple bucks. Here's our property on 4172 Vandalia that sold for $50,000 as is. Yeah, it's funded. Yeah. So I can ring the deal bell here. I think it doesn't really take, it doesn't take a brain scientist to understand the other property's a little bit nicer. There are some finishes that we could make here and some things we could redo to make it a little bit prettier and maybe boost that rent a little bit. But again, the difference between that property that you saw previously and this one is you have balance sheet equity baked in. Could one imagine if the guys who sent that property up for $85,000 sold it for $85,000? Mike, who bought his for $50,000, is over the moon. He's over the moon. I mean, in his house, again, it's not as sexy, but it ain't bad. There's nothing wrong with that. And Mike's going to be able to take all of his money back out and do it again and again and again and again and again and again and again. And while the guy who buys the property for $85,000 and gets $900 in rent, and $900 in rent, and $900 in rent, he's not buying an asset. He's buying an income stream. And once he deploys his funds into that property, the 20%, 25%, 30% down that he pays is buried forever until he sells the thing or the property appreciates to the roof. Mainstay, we have 3 different pillars of what we do. We got to have a dividend. We got to have cash flow or it doesn't make any sense, right? That's what we're all in this business for, residual income. If we get a residual income via the dividend of rent, if we can build balance sheet equity to where if we're in for every project at 65, 70 cents on the dollar, and if we can maintain liquidity, the biggest piece of it is liquidity. And every investor has different liquidity needs, but particularly in real estate, a very illiquid asset, one must maintain the liquidity to do it again and again and again and again, or you're going to be out of luck after a couple deals. So again, I can sit here and I can put the link to the Dropbox pictures that Mike just bought, but again, this is Mike's property. Mike bought this thing 5 or 6 doors down, whatever it is. 4172 Vandalia is our address, and then again, the one that just got sent out is 4128 Vandalia, so let's just do this. All right, folks, it looks like that's, how many doors down is that? It looks like there's some traffic on the road. So 1, 2, 3, 4, 5 doors down. Okay, here's the subject, there's the comp. So 5 doors down, $35,000 difference. You're paying 60% more for a house that's in identical condition, not identical condition, a little less or worse condition, but you're giving up condition, you're giving up sexy backsplash and a 2-year lease for liquidity and balance sheet equity, and that's a trade I'll make all day long.